So let's get right into it with more insights from Market Gauge Group Managing Director Michelle Schneider and Bitwise Asset Management President Teddy Fasara. Now, Michelle has always been great with giving us the macro perspective. Teddy, you can give us more of the crypto perspective. Welcome to the show. So again, the Fed is raising interest rates by 75 basis points as forecast by several Wall Street analysts, Bitcoin rising along with U.S. and European stocks. So let's start off with you, Michelle. Give us, is this a brief relief spurt or potentially longer lasting? Just a brief look at the markets first.
Well, there's a couple of interesting factors to examine, even before today, which, of course, obviously the 75 basis points seems to have been priced into the market with a positive reaction, which, by the way, is what happened at the last meeting. Initially, the market went up and then got a little bit more realistic after that. But what we have different this time is we have a couple of interesting risk-on assets doing well. And so we like to look at the high yield, high debt junk bonds, whether you look at HYG or JNK, and they seemingly had bottomed after the June drop, and now they are really into resistance. So I think one of the key factors in terms of where the market goes from here is to keep your eyes on those junk bonds, because right now they're saying, even with the raise of the rates and even with GDP potentially coming out negative tomorrow, things aren't so bad. And so that's promising. As far as the overall indices go, we have obviously growth leading here, which means that's why we're seeing the NASDAQ go up. And that's, by the way, very much tied to altcoins. It seems when speculators come into the growth area versus value, we start to see more speculators going into the altcoins rather than Bitcoin. But that's on the side there. Getting back, we are really into resistance. So if we want to see the sustained rally right now, we need to see, for example, the S&P hold now over 400 or SPX 4000. We need to see the Russell 2000 and especially the retail sector hold up. It's been all over the map. This week alone, it's still really underperforming, particularly if you look at it against growth. And in order for this market to stay firm, we have to see the consumer stay in the game, whether it's the consumer of actual stocks or the consumer in the overall economy, which right now has been surprisingly okay, but still very tepid.
Teddy, I want to have you weigh in on here. Maybe you can explain some of the crypto action we're seeing now. Bitcoin rising almost, it's approaching 9% for the past 24 hours, just a 3% for the past hours since that announcement by the Fed was made. What's going on with crypto?
Sure. Christine, it's nice to be with you again. And Mish, thank you for that commentary. Before I talk a little bit about Bitcoin, I just wanted to step back for a moment and acknowledge the momentous nature of the occasion that we have here today. These are the biggest back-to-back rate hikes that we've seen since the early 1980s. You may not be able to tell by my hairline, but that was well before I was born. And this is an incredibly challenging situation for the Fed and an incredibly fraught overall market and economic and interest rate environment that we're working on navigating through. As it relates to Bitcoin's performance in particular, as Mish referred to, we're seeing a bit of a broad relief rally amidst all risk assets post the announcement. I think the market was looking for 75 basis points and a sort of neutral tone from the Fed, and they got that. Matt Hogan, Bitwise's chief investment officer, was speaking with a group of financial advisors recently and was talking about the fact that the twin macro environment has been dominating crypto price action recently, the global macro environment. And then there's also been, as you've talked about on your programs a lot, Christine, the credit crisis, the micro nature of the credit market within the Bitcoin and crypto community that has impacted that market specifically. I think we're starting to see some of those factors recede and starting to see Bitcoin trade on its own and crypto trade on its own relative to things going on within the crypto industry that are fundamental drivers of price action. And we look to see more of that happen as this market continues to evolve.
Yeah, I want to get into some of the specifics that Powell said. One that really caught everyone's attention was an unusually large rate increase could happen at the next meeting, depending on what data they receive. Michelle, what do you make of that?
Well, clearly he said several times that he's less worried about recession. In fact, he even basically said that those numbers change all the time when the GDP comes out. They can have, different forms of cooking those numbers in essence, and that his main focus is still inflation. And clearly he should be focused on inflation. So I think that's really what he's talking about. If the labor market doesn't fall apart, and that's where the definition of recession gets a little different than typical, because right now we do have a strong labor market, but we also have a very, very large participation rate in terms of declining numbers of people actually working in jobs open. So essentially, if he's looking at labor and the unemployment numbers come out, which will, by the way, happen next week, okay, I think that's what he's referring to is not only that, but if we can't get energy prices under control, in particular natural gas and oil prices, which is very likely, I think that's really where he's going to start to say, well, maybe we need to do something more aggressive. I know right now he's got to be hoping that he gets that soft landing that he keeps promising, and obviously we can see so is the market hoping for the same thing. So we'll see. But inflation, I mean, he said it like 100 times during his speech, and that really is still, we personally, by the way, Christine and Teddy, do believe that inflation has peaked at all. We actually think that there's been sort of a calm before a storm, and the storm could be another super cycle that emerges, in which case then I think Powell's going to have a really tougher job.
You mentioned, Powell mentioned inflation about 100 times. We have a clip. Let's play some of the things he said.
Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty in what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks and determined to take the measures necessary to return inflation to our 2% longer-run goal.
Teddy, let's take it to you. So obviously, Powell's very concerned about inflation. He said it's necessary to slow down growth to curb inflation. And on Thursday, we're going to have second quarter GDP numbers coming out. He says we're not in a recession in the United States, but those numbers could say otherwise in just by the end of the week. What are you looking out for?
Yeah, so a couple of things. We've clearly entered a political environment where we're going to hem and haw over what the definition of a recession is for a little bit. But the more interesting thing that I thought Mish noted was whether or not we actually get more inflation and not less. Now, Chair Powell was very conscientious to say that we're going to continue to see a data-driven Fed. We get 2 more CPI readings. We get 2 more labor market readings before they'll have to decide again. But I think the thing that I'm most interested in watching is whether or not this policy tool will actually be effective as a mechanism for reducing the inflation that we're seeing in the market. Does the increase of interest rates, which they think will have an impact on the labor market and slow down the economy, which it appears to be doing, but does that actually reduce inflation? And I think the next 2 to 4 months, we're going to see a really interesting time in American economic history, combined with the geopolitical issues that we're all watching overseas, both in Europe and in the East. And we're going to be learning, does this mechanism of raising interest rates when inflation is high to slow down an economy actually slow down all different types of inflation? And I expect that will be the debate that we're having in a few months. Not are rates going to continue to go up? It's, do interest rate hikes actually stop inflation of this type? And that's going to be a really interesting both academic and functional conversation that I think that we expect to be having.
Michelle, it sounds like your answer to that question is that it won't, that this won't work and that inflation will continue to go up. And so I wonder what happens from here on out.
Well, I completely agree with Ted's questions because those are the questions. So there is obviously certain aspects of raising rates that create a demand destruction, which has become like the big overused term lately, that will actually bring inflation down. I mean, in certain, but there are a couple of areas that you can raise rates and raise rates that will not necessarily do anything to stop inflation, and that's particularly with two things that the Fed can't control, which is A, what happens with oil prices and gas prices, and two, what happens with food prices. Now, food prices have come down from its peak, but yet we have Mother Nature, and you can't interest rate rise Mother Nature from doing what Mother Nature's doing, which has been from floods to fires to drought all over the world. And then also Ted mentioned geopolitics. That's another thing that's going to be very difficult to control without really putting such a screeching halt by making it so that nobody can leave their house and do anything because everything's so expensive, including eating. And that's a scenario that sounds so dystopian. I don't think that's realistic. To me, what's much more realistic is the Fed will really have to reckon with what to do when inflation continues to move up in the areas that are beyond anyone's control at this point, which is raw material supply.
Certainly a lot of factors to watch out for. We got to wrap it there, but Teddy, Michelle, always a pleasure. Thank you so much for your insights in this following Powell's latest announcement on a 75 basis point rate hike. All right, that was Market Gauge Group Managing Director Michelle Schneider and Bitwise Asset Management President Teddy Fusaro.